Hi, welcome to this video today, which is on the 1st of January. We are on Wednesday. We're just going to be looking at what we consider to be a really good risk-reward trading opportunity in the market today, which is USD NOK, and a very simple way of swing trading. Now, the techniques we'll look at today, very, very simple. We're looking at them in terms of USD NOK, but you'll see this trade setup come up frequently. And when it does, it offers really good risk to reward, and also in terms of the trade, you're probably going to get a result really quickly. So you're either going to get hopefully a nice profit or a small loss. So your money is working hard. And I always think, yes, swing trading, great strategy for beginners. It's easy to understand the logic and have confidence in it, and it doesn't require a lot of patience, let's say, like long-term trend following does. So yeah, it's a great way of trading the markets. In our view, we like to swing trade, and this is one of our favorite techniques. And all it is basically is looking for big levels of support and resistance using Bollinger Bands in association with our trend lines and just reading the candle action, just a few candles on the right, not on the left of the chart, to detect if a turning point is near. Right, let's go and take a look at the chart. But just before we do so, please do keep in mind, it is my view. As of right now, it can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including our exact entries, stops and targets, you can get live access to our member center on the link beneath this video. And at the moment, you can get for a limited period a discount on your membership fee as well. Right, let's go and take a look at the chart. USD NOK daily chart. Now, just in terms of this swing trading setup, it's one of our favorites. You can do it just purely technically, but we like to look at the fundamentals and sentiment behind the chart as well. Sorry, why has the USD fallen hard here? Well, generally, you've had a USD sell-off across the board. There were just too many speculators long. This isn't the only pair the USD has corrected in. But a major influence in this pair is firm oil prices have been supporting the NOK. And we're looking at the crude oil chart. We think we're going to get a turn down there. And that will hurt the NOK. Norway is a country heavily dependent on crude oil. So obviously the firm prices have supported it. We think we're now going to see that end. USD is oversold, and we should be going up. Now, in terms of where we're using Bollinger Bands, we like them nice and wide, and we like to read nearby candles in terms of price action and look for key support and resistance levels. And we've got a key support level here, which is, sorry, I don't get my line straight. You can see why I've drawn it. It's also a weekly support level. So we come up here, try and get through, can't manage it. Then we work our way up to do it again, or try and get through the level. 2 candles pulls, one basically just finishes on the level. Then a big blue pushes off, and then we're off to the upside. Now we've nearly retraced all the way back to the support level. Now, in terms of is the selling exhausted? Just going to look at 3 candles here. Big red. And you get this blue here. Tail poke towards the support level, but cannot get there. But finishes blue, yeah? This red candle, this tail pokes towards the level, through that tail, can't get through the support level, and then we finish above the blue tail. Now, my own view is, I think the selling is exhausted. Okay, so I'm going to use a very aggressive entry, and when we got the bands really wide apart like this, the first target is a reversion to the mean price. Yeah, when you get big moves up or down, they will revert back to the mean price at some point, and I think we're ripe for a move back to the mean. Sometimes you can actually run band to band. This band will come down. Price is dynamic, of course, but I'd be looking for more than the mid band. Okay, so we finish red. How are we going to do it? Basically, pretty simply, I'm just going to do this. So if I can get my mouse to work. Sorry, the trajectory is not being drawn correct. Okay, so basically body, body, body. I'm not going to even wait for that tail to give away. Comes straight through the level. Okay. If the selling is exhausted, which I believe it is, don't need to wait for that blue tail. I'll come through the bodies. Okay. Nice aggressive entry. Then I'll look for a move back up initially to the 9 level. And I've got a feeling from my reading of the sentiment and fundamentals, we could well run on back up to chart highs. Obviously, we'll manage the trade as it goes. Now, in terms of these setups, yeah, I'm going with a very aggressive entry. I want to see a nice blue if I'm triggered, yeah? If we get nice blue, then the chances of follow on are pretty good. And yeah, when you look at exaggerated price spikes, the upside or downside and high volatility, they will normally retrace a good proportion of the move, and sometimes they'll retrace it all. I've got a feeling we could retrace it all. And it's a very simple trade setup, but we use it frequently. Like I said, you can do it purely technically. We will normally do a quick look at the fundamentals and sentiment to give us clues to help us basically decide whether the turn is about to come, okay, which we think it is. Obviously, if we sell off through this level, what I can do is I can look to come back through it. If we break its key support level, become resistance, I can go back through the level, okay. Obviously, that scenario at the moment has not come into play, but it's certainly one I would look at. So I'd look to grab it back through the level. If we went through it at this moment in time, it's going through nearby resistance. So yeah, very simple trade setup, but I found it very effective over the years. What I would stress, you need big levels, okay, and you want high volatility. You want the bands wide apart. You want a good distance from the mid band. Now, I don't know if I said it, but if we come through on a nice blue, I'd expect immediate follow through, so I could bring my stop up tight. But yeah, in terms of towards first target, you get 3-1 on this one. You'd have 6-1 the second target. Second target may be a little bit ambitious. I'm sure a lot of people watching might think that, but that's my reading of the sentiment and fundamentals. But just to the mean price and that key 9 level, it's a good risk to reward anyway, isn't it? Or I think it is. Anyway, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.